Every stock is in the portfolio for a reason, and not every stock in the portfolio plays the same role. Actually, the predominant important thing is that it is a portfolio of stocks, not an individual allocation to stocks that all meet the same criteria. So some companies are in the portfolio because they're undervalued. Some companies are in the portfolio because they're really high quality over others, and that value, it might be worth paying a little bit extra for companies like that. And then some companies are really in there because they're just on a short-term basis, their outlook is being underappreciated by the market, and there should be a near-term surge in the stock price. So it all depends on the reason for holding a company, and they can be different. But also the roles that each company plays in the portfolio will play out differently over different market scenarios. And the thing is, like the macro environment, we never know exactly what monetary policy is going to be. We never know exactly what political scandals are going to happen, or what election outcomes are going to be, what regulatory reform there might be in a healthcare sector. These things are all very unknown and can have polarizing outcomes. So what's important is to actually build portfolios that withstand multiple different future scenarios. So you might have defensive companies that have exposure to upward rising interest rates, like banks. That might be a good position to have in the event that interest rates start to rise. But in the event that the economy is slowing, you need some utilities exposure, because the world is not going to be in an interest rate rising environment. You need some exposure to secular growth themes like healthcare. You might need some exposure to cyclical exposures like some undervalued retail stocks, or some really beaten up autos or something like that. So there are different roles that positions in your portfolio are going to play, because you can't forecast what different macro scenarios are going to occur. You just need to build portfolios to withstand all kinds of different outcomes.